Good morning, everyone. Thank you for joining us for another episode of Financial Fun Friday. We are so happy that you could join us today. I want to say welcome, Leanna, Beverly, Alice, and Davita. I hope you all are having a fantastical morning today. Welcome to all of our call in listeners. Thank you for joining us today. So we're going to go ahead and get started. And of course, we weren't finished praying. You're welcome because we play that song because you are welcome here at Financial Fun Friday, right, Rita?
Absolutely.
Absolutely. And here on Financial Fun Friday, we like to have fun because we just roll with whatever comes up because we are all the way live. So with that in mind, we're going to go ahead and get started. Welcome again, everyone, to Financial Fun Friday. I am your co-host, Darlene Jenkins, and my other co-host is Dr. Rita Bailey Rowland, and we are, of course, being sponsored by Affordable Benefit Solutions, where we are always bringing you what's new and what's next. And guess what, you all? You just saw a new face pop on the screen. She's back to give us some more great information. We have joining us today for Financial Fun Friday, Dr. Javon Walker Jackson. Let's not forget that part, Javon Walker Jackson.
You better get that right because I stay in trouble with long.
Right, because stay in the good graces of listening. So welcome, Javon. And all of you on Facebook, please check in. This is the check-in time. And if you are just joining us this Friday for the very first time, I want to let you know that Financial Fun Friday is a webinar that we host on the first and third Friday of each month. It's at 10 a.m. Eastern Standard Time. And we're also broadcasting live simultaneously on Facebook Live. Hey, Facebook, welcome. Thank you all for joining us there on Facebook. As I said, please check in right now. If you're with us live on the broadcast, check in. Let us know where you're tuning in from. And if you're on Facebook, because we know you watch us on Facebook from all over the country, and I'm speaking this, the world. So let us know where you are checking in from. Rita, if you could just give that to me. So during the Financial Fun Friday broadcast, what we do is we just pull back the curtains so you can get an in-depth understanding of not only your employer benefits that you have, but then also just helping you. We give you retirement preparation options, financial tips, and strategies. So if you would like to join us live here on the broadcast, you can register at ritabrolandevents.com. Or right now, just take a moment. If you are not following us on Facebook, please head on over, pull up your phone, get on Facebook, and like us and follow us at Your AB Solutions on Facebook. All of the broadcasts, if you should happen to miss one because you weren't able to join us live, you can always catch us on YouTube. Watch all of our prior episodes, not only on YouTube, but also on our website. So if please right now go to YouTube also. So that's two things. Go to Facebook, Your AB Solutions, and then go to YouTube, Financial Fed Fridays, and subscribe and like us there. So Rita, where are they checking in from?
They're checking in from North Carolina, Delaware, Temple Hills, Maryland. We have Upper Marlboro, we got DC, we got Baltimore. And yeah, I think that's it so far. And I want to just say a special hello to Ms. Norma Samuel. Thank you for joining us.
All right. Yes, we have quite a few on with us. And here on Financial Fun Fridays, when you talk, guess what? We talk right back to you. So don't be shy. Put your comments in the chat. If you're on Facebook, send us a comment right there also, because we will talk back to you there as well. So the whole purpose of our series is just to help you get an understanding of your benefits, your money, your spending habits. Let me just interject real quick. If you have not taken our money personality quiz, you want to do that, because we went in depth in terms of your money personality, which directly affects your spending habits. And then, of course, your Financial Fun Friday team and those of us here at Affordable Benefit Solutions, we're here to offer support and solutions that will enable you to reach your financial destination. So that's why we're doing this. So before we jump into today's information, I just want to let you know that everything we're going to be presenting on here today is going to be presented in a generic approach. And so why do we do that? Because we don't have everyone's particular information that may be watching us now or even later on YouTube or on Facebook. So without knowing your particular circumstances, we can't customize this for everyone. But what we can do, if you see information on here that you're like, Darlene, I want to know how I can participate in that. How can you help me get my situation together? Give us a call at 301-577-6340. And anything that we present on here, we can craft a solution for you. So please accept this information as general in context and apply it where you feel it fits your particular situation. But again, reach out to your Financial Fun Friday team and our team members here at Affordable Benefit Solutions, 301-577-6340, and we will help you craft a plan for you and your family. So, as you know, this year's theme for Financial Fun Friday is fiscal, our money, fiscal fitness. We're trying to get our money strong, right, ladies? Absolutely. And so in that theme, we are going to be discussing how to get our money more fit, how to give these dollars more than one job. And so today, as I said, we have a very special guest with us who is going to be going over 10 reasons the rich use life insurance to create wealth. Now, I just want to give everybody an opportunity right now. Grab a pen, or if you use your phone, pull up your notes. And that's why I really, they need to get one of our notepads, Financial Fun Friday notepads, so you can write down all of these nuggets so you can have them in one place. So if you weren't here last week, I want to just tell you about Dr. Javon Jackson, our financial coach of hope here with Affordable Benefit Solutions. She is the financial hope of a coach. Yes, she is. She is the coach, the hope that most coaches want. Let me stop. Help me, Rita. Help me, because I'm telling you.
She's the coach she's the financial coach of hope. You know, that's all right, darling. It's Friday. You having some fun getting them names all messed up, y'all.
And this is important because you know what? She also has started her own investment advisory agency, and she is the president of Good News Financial and Investment Advisory Services in Maryland. You know, and she helps you with debt elimination, taxes, planning. She's even an author. She's wrote a book, a best-selling book, You Be the Bank, How to Bank Finance Yourself to Wealth. And so in that vein, she's going to be going over, as I said, the 10 reasons the rich use life insurance to create wealth. So if you missed last week, these were the points she went over last week. Rita, you want to go over this before, because I know everyone I see they're like, okay, let's get to it. So here's a recap from last.
Absolutely. We're going to go quickly because we want to leave Javon enough time to finish the So the first one is we have principal protection that guarantees of your money. And one of the things most people want is not necessarily the return of their money and the return on their money, but they want the return of their money. So the beautiful thing is that with us and in this life insurance that she's going to discuss, you're never going to lose any money, that your cash value is locked in. So once you earn it, you cannot lose it. And guarantees are important to people. Guarantee growth of your money every year. And so the beauty of that too, like the market, some of us have our money in mutual funds, stock, they go up, they go down. It's like a roller coaster ride. With these products, your money is going to always go up. Now, sometimes it may have a steep climb, sometimes a small climb, but you always get to share in the profits of the company. Your dividends are paid to the policy owners, are not taxable. And we know that where we are right now is the economy. We're going to be in inflation, deflation at the same time. How they going to recoup all of the stimulus money, the market crashing, your finance. And they talk about the boomers being one of the, they're going to have some shocks of their life because they live during some really good time. But a lot of them have money in vehicles that are taxable. To have a vehicle where you're not paying taxes on it, it is major to your retirement success. So these are not taxable. And it has a high starting cash value amount based on the amount you contribute. So one of the things, Javon, we talked about last time was that not all life insurance are created equal. And then if it's not properly structured, you can have whole life, it'll work, it'll do what it do. But if you're looking for something that's going to give you the benefits of what she's going to talk about, having each dollar work for you twice. Y'all know I love talking about taking money out your left pocket and put it into your right pocket and being able to use that to create wealth. And the last one is that you can have access to what I just talked about for any reason without taxes or penalty. So just imagine one of the reasons why my nephew did this, that he was 27. You're thinking about if he put it all in his 401k, one, he can't touch it till he's 59 and a half. And if he does decide to withdraw it, not only do he have to pay taxes, he had to pay an early withdrawal penalty. He was thinking about buying a home, having a family, having children, and he wanted to know, he wanted a vehicle that he could use as he built his life and have a lifestyle. And so this became important to him because he could take it out, he could borrow from himself, he wouldn't have to pay taxes. So it is very, very critical. So just those first 5 is enough for me, but Javon is about to give us some more. So let's go with, y'all, you look, she ready, y'all. She didn't just stretch it all out. Y'all in trouble.
You saw that reader like, get ready, get ready, get ready.
Yeah, like what?
Yeah, so come on, Dr. Jackson, and lay it on us. These last 5 reasons we need to be using life insurance as the rich do to accumulate wealth.
Oh, you guys are so awesome. Yep, let's jump on in. Take it down. Take that down. We're going to go through it one at a time.
Well, let's stop sharing this.
Wonderful. And let me say this. So thank you guys again for inviting me back to share. And just as probably what do you call it? Let me apologize in advance. I got my little one here today. She wasn't supposed to be here, but she's here. And I done lost about 14 minutes. I gave her a cupcake, and set her in her chair. And so she done licked all the icing off of the top. So hopefully we can get another 15 minutes out of her there, for just in case you guys hear some, there it is. You hear some little ones, that's her. All right. So now we're going to run through these next.
Excuse me. I had to interrupt the baby. Can y'all help my girl Javon tell her she cannot give a baby sugar and think she's going to be calm? That's just all I'm saying.
Yeah, listen, you got to look, I don't know. She don't get no cupcakes early like this, but listen, if you want quiet, you better give them what they want.
Oh, goodness, go ahead.
Yes. Usually I got my husband, he started a new job this week. So I got the house back to myself. So, but yeah, it comes with the pros and the cons. So, but we're excited. It's still a great day. All right, guys, let's jump on in here and just staying in that same vein we left off. Where we left off at, but let's jump into way number 6. And again, just staying in that same vein of we're starting at 6, right?
Yes.
Okay. The number 6 way is the ability to use your cash value to recapture lost depreciation on major purchases and interest and fees paid to banks. And so if you learn how to treat this pool of money inside the policy like your own personal bank, right? That's why I wrote this book, You Be the Bank, right? After learning about these strategies, you can really learn how to start loaning to yourself as well as others to create wealth. And this strategy has been around for thousands of years, right? And any business model that has lasted that long is absolutely worth understanding and using to your advantage. And so this is one of the favorite parts because a lot of times when people start to draw down or withdraw from their traditional plans, especially in the same year that they may have experienced some type of loss and paid substantial fees, then that further or accelerates the depletion of their funds. And so what savvy people have learned to do is to take and utilize their cash value in those years to recoup that lost depreciation, right? Or lost interest that they lost on their traditional. So it's a great hedge against depreciation as well as market risk as well. So that's way number 6. Now, going into way number 7, it is guaranteed insurance. Once the policy is in place, your insurance is guaranteed for the rest of your life. Many people, they tend to assume that they'll be able to buy new insurance at any point in their life, but that is the farthest from the truth, especially for those who've been diagnosed with some type of chronic illness or terminal disease, okay? If you became seriously ill and you don't expect to buy a new policy, okay? Because you will at that point become uninsurable. And I actually had a situation yesterday. I was talking to a lady. She was about almost 70 years old. And I guess 15, 20 years ago, she bought a term policy, okay? And, was talking to her, and she had an incident last year that looked like a stroke, but it wasn't a stroke. But they put her on seizure medications, but she didn't have it. See, all of this back and forth that we tend to go through with the medical system. But for her, now when it comes time for her, she talked to the company who, she had the term insurance with. Then they basically told her, no, don't worry about it now. Wait till about 6 months before your term expires, and then you can apply for some new coverage. I said, no, ma'am. One thing about, not only are you it's a possibility that you may not even be insurable, but assuming that you are, now you're waiting 2 more years, which means you're going to be in your 70s, right? Insurance is what? Age banded and health banded, right? So now you're paying higher where you really should have replaced this years ago. And so that's the benefit, just having that guaranteed coverage in place where, Lord forbid, you develop some type of chronic or terminal illness. You don't have to worry about, you're locked in. You're locked in at that healthy state that you were 10, 20, 30 years ago. And let's just say even a year ago, because some of us have had situations that just happened in a year that wasn't here a year ago. Okay, so that's another benefit there.
Let me just, it's just so interesting you talk about that, because me and Darlene were just talking about a client of mine who had a policy and was trying to convert it to a whole life. Same company, same face amount. Mm-hmm. So the risk to them is the exact same death benefit. But because now they pulled her records and her trying to move it to a whole life, they deny her. And she's in the same company. So when you talk about being able to lock in, people take time for granted.
Yep.
So that is really critical that you talk about that. So
yeah. Sure. And also with many permanent plans, in this case, we've been talking about the whole life chastity, you can also add an accelerated death benefit rider, right? For little or no cost, which pretty much gives you access to a large portion of your death benefit during your lifetime, if in the event you do come down with some type of chronic or terminal illness. And again, we just can't begin to tell you how many people had a colleague who was diagnosed with Lou Gehrig's disease or ALS, and was sent a check from his insurer for more than 70% of the eventual death benefit, right? That he passed away. But these are benefits that you don't have to be dead to use, okay? You can use them while you are alive, okay? And so he'll be able to enjoy his remaining time without worrying about how he'll pay his bills and things like that. So that's another part of that guaranteed protection. And then number eight is the ability to combine your life policy with the worlds of real estate, private lending, and auto financing to accelerate your wealth, both inside and outside of the policy. And just remember that any funds inside the policy are tax-free for life. And so this one here is really my favorite. We touched a lot on this last session where we talked about understanding velocity. This is how you're velocitizing that money, where now you are leveraging it to make purchases in real estate, or you're leveraging it to lend to an investor, right? I have several clients who've done that. They've used the money in their plan, where their plan may have a loan rate of 4%, but they're loaning it out to a third party at 8%. So what did they just do? They just made 4% on their money outside of the policy. And then guess what? They still made their 4% or whatever their guaranteed interest and dividends are inside the policy. Man, so that's just a total of 8% now, 8 to 10, because I'm just counting the guarantees, right? On their money, same pot of money, but now it's working in 3 different places. And that's the power of it. That's what really drew me. This part right here is really what drew me to this industry, right? To begin with, I use an example in my book of how a person could purchase a car every 5 years with the money in their policy, and see at the same time, watch their money continue to grow. So instead of years of financing through Toyota and BMW and Mercedes and all of those things, that Tesla, right? All of those things that we like today, you could be your own bank. Pay for your car through your policy and pay yourself that interest, and watch your family's balance sheet increase versus your liabilities increase. And this was the way we've been trained to do it all of these years. So just powerful. So that's number 8. Go ahead.
So on I think we started like November, December last year. A client of mine had a plan. She had some money, and we sat down and we created her whole financial plan. She wanted to invest in real estate. She had some debt to pay off. And so we did this plan for her. I think it went effective in February. Just Monday, she got her first deposit to BIC. So one of the things, she had money in the bank. And so we know the banks are paying 0.25% of interest, right? And so instead of just using money out the bank and lose that money and just invest, but that pool of money is gone, we created it and we put it into this plan. She just took it out on Monday. She bought her investment, and the money that she would have paid herself on the loan, she's paying it back to herself. So now that money is doing 2 jobs, earning more interest than 0.25% at the bank. And now she's making money. So she's used one asset to create another asset that's going to create another stream of income. And this one over here is growing 5-6 times what it would have been in the bank, and she's never lost it. And she also has a death benefit. So when Javon talking about this was her best part, you can understand, because it's where really the rich people use their money multiple ways to create wealth in different streams. That's powerful.
It's totally powerful. Totally powerful. I got an echo. Can you guys hear me okay?
Yes, we hear you.
Okay, perfect. All right. So where are we? Number 9?
9.
Number 9, protection from long-term care and chronic care expenses. And we kind of touched on this already, but a well-written policy with the proper companies could provide the ability to access a portion of your eventual death benefit during your lifetime to help you pay for assisted living or long-term care expenses. And this will absolutely insulate and protect your other wealth, right? So you don't spend a lifetime of building wealth only to give it all back before you pass away, leaving nothing for your family. I just recently had one of my friends, she had a family member who passed away recently, and one of the things that she shared with me was that he was about 92, and one of the things she shared with me towards the end of his care, her aunt they were paying out of pocket for the care, the quality of care that they desired for him, and thankfully they are, because the wife is still living, they were and are in a position to do that. However, had he continued to live and no longer, not really knowing the extent of the care, like for years and years, that could have potentially drained their wealth, right? Now at what point in time that would happen, I don't know, but it could have happened because they had started to tap in to their personal savings and getting ready to sell a house and things like that, which I don't think they were in any financial hardship, but most people are not in a position to do that. When you start, draining your TSPs and your IRAs, things like that, man, it's a double, you're getting hit double, because as you're pulling things out to pay for this expenses, Uncle Sam is taxing you even more. Your ordinary, your tax brackets and things like that are increasing because you're taking out more money to cover these expenses. So it's just one of those things that when you have a good plan in place, a good plan will hedge you against those type of risks so that you don't have to take all of the sacrifices that you've been making for the past 20 and 30 years in your retirement accounts and now spend it on healthcare expenses. Okay.
Javon, I just want to add something. You mentioned something here. You said, you draw down on all of, your savings, everything you've tried to create. Well, not only do you draw down on what you were trying to create, you also draw down on your family members' monies as well.
That's
Most
right.
people, when they think about healthcare, they're looking at it from a singular point of view. Well, this is affecting me. Bad health doesn't just affect you. It affects everyone around you. Because when you get a long-term care diagnosis, guess who else got one? Your caregiver. Yes. And if you don't have enough money, that money got to come from somewhere. It's going to come from somewhere. I know. It came from me. It came from my daughter's education. And it came from my mother. She ended up filing bankruptcy. And this was a federal employee, civil service system, earning over $70,000 a year in retirement. Wow. Over that. Had the federal employees' health insurance. So it's very important that you position your assets, because when you go through something, even though it's happening to you, it's not just happening to you. You're not the only one who is going through this experience. And financially, we always say, hey, spread the wealth. Well, guess what? You also spread the debt.
And the burden. Yes.
And the emotional that comes with that to another level, because not only are you dealing with the emotion of them being sick, you're dealing with the emotion. I remember you going through a sacrifice, and do I choose my mother? Do I choose my daughter? Do I choose taking care of my mother? Do I choose working? Like, it's serious because you don't have a plan in place. So yeah. Good point, Javon.
Excellent. And then the last one, number 10, and this one is the most obvious one, but sometimes we take the simplest things and we complicate them, is it the death benefit, right? In addition to all of the benefits that you can make use of while you're still alive, right? At heart, the investment is still a life insurance policy. So when you eventually pass away, there will be a sum of money left behind to your beneficiaries tax free, right? And there really is a reason why many of the family dynasties, banks, big corporations have been using permanent insurance for generations to grow and protect their wealth. And even when subject to estate limits, the wide coverage of life insurance makes sure that these death payouts go a long way toward promoting the tax-free intergenerational transfer of wealth. This is the most easiest, number one way to transfer wealth to a new generation. Right? You don't have to, become this big successful corporation or multi-millionaire or billionaire to be able to leave wealth. You can use a simple insurance policy, right, to do that, no matter what your life experience has yielded you. And so, of course, I got to say, there are different insurance companies. There's so many different products and options, services, different riders. All of them vary by state, by company, right, by product, and that's due to the state regulations. And it depends on the critical or the actual insurance carrier themselves, but you won't find another type of account or investment that has all of these benefits in one place. Not your 401k, not your TSP, not your IRAs, not mutual funds, not stocks, not bonds, precious metals, real estate, none of that. And guess what? I offer them all and I endorse all of those vehicles, but none of them have all of these benefits that I just talked about under one umbrella, right? Nor any other account that I have failed to mention, okay? And so rather than a liability, a good life insurance can be a great asset to you and your family. So hopefully this has definitely gave you some things to really consider as it relates to the type of coverages that you have. We really encourage you to sit down with one of us to see if a permanent plan or a specially designed permanent plan, because that's what I want to continuously emphasize, is that not all permanent plans, not all whole life plans, not all universal plans are created equal. In fact, with universal, people don't even realize there are like 3 different types that fall under that, right? And so sometimes we hear terms and we think, oh, I know about that, or I heard about that, or I own that. But it's 9 times out of 10, it's not the exact ones that we're describing that gives you all of these benefits at one time. So hopefully this was helpful to you all. It has definitely been great sharing this information. And so if we have a few more minutes before my little one get real live, we can answer a few questions for our callers.
Well, while we wait for people, if you have any questions, please put it in the chat box on Facebook. Javon, I think about 11 years ago, I was talking to a client and she told me that her grandfather left all of his kids and grandkids a $250,000 trust account. And I'm like, what did granddad do? Because that was $5 million. And at that point, I realized what the rich was really doing. He didn't have $5 million. He had about less than $1 million that he created a $5 million insurance policy over his lifetime that was able to leave his kids 5 times what his investment was. Probably wasn't even that much because of the time. And so he understood that he didn't have $5 million, but he understood that his life insurance could leave his family in another position that he could never even imagine. And from that point on, I began to talk about people, how do you leave your family? Many clients want, and we can talk to you, I won't give you everything right now. They want to take some assets and leave it, but they're leaving their family with taxes, they leave it on with risk. And so sit down with us, because these things can really change your life. One of the things that we all know that we all share in common is one thing we all share in common. I said it last time, it is death. That day is coming. And what does it look like for you? How do you plan for it? And as morbid as you may think it is, I don't want to talk about it. Whether you choose to talk about it or not, it doesn't stop it from happening. The only thing that none of us know is our date. And so planning for that becomes critical, and having the right vehicles in place to cover everything.
And you know, Rita, over my 31 years of being in this business, after going through, thank you again so much, Javon, for sharing these 10 reasons. But you hit on something, both of you, about passing on the wealth tax-free with life insurance. If I had a nickel for every time someone, as we're talking about life insurance, would say to me, well, I'm not trying to make anybody rich. My question to you is, why not? Why not? That's the number. Life insurance is the number one way to pass on wealth tax-free. But just sitting here, I'm like, maybe we are just not informed enough. So we're going to get on this bandwagon to start informing people. You don't want to make anybody rich, but the family wants to have wealth. Who's going to be the one to start the wealth in your family? That's my question to you. You don't want to make anybody rich. Let's see how many people we can make rich or get them started on that pathway to that. So Rita, did we have any questions? I don't see.
No. I don't see any more questions, but we just want to thank all of our watchers on Facebook who have joined us. A lot more have joined us. Hello, Bill, Teresa, Sherry, Constant, Joan, and to all those that have joined us online. We thank you, because one of the things that I'm so glad that you all decided to come, and those who will watch this later on YouTube, understanding how life insurance work is so important. Javon just shared some information that we've often watched other things to tell us permanent insurance is not important, that, you know, buy term and invest. The difference. Not saying anything about term, because term could be a part of your portfolio, but for the one that's going to probably be here when you're 90, if you live that long, it's probably going to be a permanent policy. And term insurance, not disrespecting them, but they pay out about 2% of their claims because people normally outlive it or cannot afford the increase in cost. She talked about comparing insurance to renting an apartment and buying a house last time. So understand the full gamut. It's not about your life today. For me, I'm always looking out into the future. The old me, the old you. We can't plan for the active one still working, making money. We have to plan for the old one, the one that's retired, the one that we know one day will, as Darlene say, will cross the river. That's what that is. And that's what this says. Planning is bringing the future into the present so you can do something about it now. And life insurance is one of those things that you can plan for generations to come using that vehicle that you can pass tax-free. Javon kept talking about almost every point. It was something about being tax-free. Do you understand the economy that we in? Do you understand where we're going as a country, as a world? Financially, we're in trouble. No matter what they say, no matter what the smoke and mirrors look like, when it settles, tax is going to be a way for them to get them out. And if every vehicle you have is in a taxable vehicle, you probably lost 40 to 50% of your income to taxes and fees. So look at something else that could really change not only your life, but your loved ones too.
Absolutely. That is absolutely correct. So as Rita just said, that's what we're doing, you all. We're trying to help you plan, because planning, as Rita said, is just bringing the future into the present so you can do something about it. When, Rita?
Now. When are we going to do it? Now.
When do you want it? Now.
Oh, sorry, you guys. That was an Amway thing. You will have to know.
Yeah. Come back there for a second. So please contact us today so that we can help map out a strategy that will help you put all of your pieces in place and put together a plan and a strategy that's best for you. And we here at Affordable Benefit Solutions, we are a full service financial solutions firm, and we can help you with all aspects of your retirement and financial life. Whether you're just getting started or you're going to be walking out the door in 15 minutes, we can help you with your retirement planning. We just went over the very first one, the concepts of tax-free retirement planning and being your own banker, how to roll over your TSPs, 401ks, what to do with that. Estate planning, how to set up the proper estate plan to help minimize those probate taxes and unnecessary costs. Your insurance services, retirement planning and insurance services go hand in hand. And we're here to help you with that, and also getting rid of credit and debt. How to also use life insurance, right, Javon and Rita? To even get rid of your debt in 9 years or less, including
You know what's so amazing, ladies? If you look at this screen, every part of our financial pyramid, every part of our house, we can use life insurance for retirement planning tax-free. It can use for legacy planning. We just talked about it. Of course, it's designed for insurance planning, long-term care planning. Some of them have disability rider. And then it's what we've been teaching people is how to get out of debt. Man, when you talk about one product that can do multiple things, I mean, it's almost like a no-brainer. It's just people being educated because we've been taught the wrong thing. Like just looking at that one product that Javon went over these last 2 Fridays has been designed to cover every single thing. And it's one of the few things in the IRS code that allows us to do all of this properly. 77.
Comment in the chat, someone had said, can you speak on why 529, the college education plans are not good for you? Well, I wouldn't say that they are not good for you. Every person's situation varies. And so but insurance banking can also be used to help plan for college. So I just wanted to comment on that real quick. So,
and I think too, with that point though, Darlene, I know you guys give us an extra minute. I think what's so important is that what you want your child to be, it may not be that. So if you put it in a 529 plan, I had a client who was going to college at 62 because she had saved in a 529 plan for her daughter who decided she did not want to go to college. And no, she became a hairstylist and doing her thing. And her mom was sitting in with all this money in the 529. So she found herself, Rita, I don't want to waste my money. So I'm going to school to get a degree because she couldn't use it for anything else. So having a plan like this, what if your child she's an entrepreneur. I have a niece who we wanted her to go to college, and she finally told us after $32,000 of student loan that that's not what she wanted to do, but she became an entrepreneur. She started making her own candles and all of this other stuff. That money could have been used to help fund her business or something else that your child want to do. You may want to get them they love real estate. You can buy them a house, let them be, a landlord. So I think not only that, it's not just about college, it's that you don't know what your child will do. So put them in a position, whether it's school, whether it's a business, whether it's whatever it could be, you're putting them in a position that those funds can be used for that child's desires and dreams and not just have a single focus about education. Because we all know not everybody's going to school.
That's right, Rita. We have another question on Facebook. They're coming alive now, girl, at the end of the broadcast. But Teresa Adams on Facebook says, what if your plan is through your employer? Now, Teresa, I'm not sure if you're talking about you are saving money through your employer or if your life insurance is through your employer. But if it's the latter, your life insurance is through your employer, then in 9 out of 10 cases, unless your employer has made that plan portable, meaning when you either retire or if you resign and go to work somewhere else, you can take it with you. But most group employer plans are not designed that way. So you would have to check with your employer, but in 9 out of 10 cases, when you leave your employer, especially in private industry, your coverage ends within a certain window of time, meaning your life insurance is going to be over. And so now not only are you facing the possibility of your life insurance being older, you're in the market as an older person trying to get life insurance coverage. And as we mentioned here today, life insurance is based on 2 things, your age and your health at the time you are applying for coverage. So for all of you out there, whether you're working for the federal government, the district, state, whomever your employer is, if that's your main source of your insurance coverage, please reach out to your Financial Fun Friday team, our other team members here at Affordable Benefit Solutions, 301-577-6340, so that we can sit down and just do a life insurance review with you. And from there, we can start crafting plans for you. You may be okay, but it doesn't hurt to have a second pair of eyes look at what you have going on now. So I hope that answers your question. If you have additional questions, again, everyone on here, we appreciate you hanging in here with us. Give us a call, 301-577-6340. And that's what we're here for, to help you craft a financial plan to help you reach your financial destination. Well, ladies, if you don't have anything to add, it's the real thing. Got real here today, right, you all? We specialize in bringing you the real thing. That's our specialty. We give you the real thing here. If you want the real, I ain't talking about the one on TV. I'm talking about the real financial fun facts, and you need to tune into Financial Fun Friday. Please join us again here on August the 6th, where we will be back with some more fun facts for all of our watchers and listeners. And when you come, bring one. Spread the good news. As a matter of fact, if you're watching this on your page, please share it from your page to others that are not on, so that they can get the good news of Financial Fun Friday. So, and please contact us. We have Dr. Javon Jackson's book that goes directly with this information. You bank on yourself, you be the bank. So call us 301-577-6340, and we will be able to assist you with that. And coming soon, Rita will have her updated book on
Understanding your federal benefits for the new retirement climb. You guys know I wrote that book, so I'm updating that. So probably within a month, the new edition will be available. So stay tuned. But we just wanted to give a big shout out to our teammate, Javon. She's doing big things. And so we do thank you for taking time today, this Friday and that first Friday of July, to share with us what's important to people, because sometimes, they say we perish because of the lack of knowledge. And so what this does, we come for fun, but we come to bring you the knowledge, so that we're not talking about we wish we would have known. That's what this show is about, giving you the information so that does not become your reason for not knowing. So thank you. Have a great weekend.
Have a great weekend, everyone. Stay safe, and we'll see you here on August the 6th. Take care.